You're listening to a Mint podcast brought to you by HT Smartcast.
India's love for gold is well known. Our parents and grandparents have been buying it since ages as an investment. They tell us to do the same. But today's podcast is not about gold investment, it is about gold loan. See, often it happens that we face a liquidity crunch. Now, what do we do then? People tend to resort to fintech companies giving quick loans or at best personal loan by banks. But these loans come at a higher interest rate. They should probably consider gold loans. Hello, I'm Aprajita from Mint Money and you are listening to Why Not Mint Money podcast. I have with me Umesh Mohanan. He is Executive Full-Time Director of Indel Money and NBFC. He will tell us all about gold loans.
Welcome to Why Not Mint Money, a personal finance podcast where we help you understand basic money concepts and share strategies for you to build your wealth. So let's get started with your money journey.
Welcome, Umesh.
Hi, Aprajita. Thank you very much.
Glad to have you here. I'll start with my first question. We do see some taboo about pledging gold, that Sona girvi rakh diya. It's a big deal in India. What do you think? Please address this taboo and tell us the role of gold loan in bridging short-term liquidity needs.
Firstly, to begin with, Aprajita, I think that taboo has quite vanished from the society, because if you see, like, gold loan is like one of the option. It's a lifestyle option. So it's the second, third or fourth option in a tier 2 and tier 3 center. But when you compare the tier 1 centers, it might be 13th or 14th option. So it's very simple when a rural or a semi-urban household thinks about their child's college fees or education fees or house renovation or their workplace enhancement or business enhancement. Always gold loan comes as an option very much, because it supersedes a lot of credit parameters set by the current regulatory networks, because the underwriting does not take place on the customer, whereas the underwriting takes place on the ornament itself. So this is an acceptable option now, and it has evolved a lot from being taboo a couple of years before.
Okay. And is it mostly meant for short-term liquidity needs, or do people go for maybe if they need money, a good amount of money, then also they pledge gold?
So basically what we have seen is that everybody comes with a mindset. I mean, majority of them come with the mindset of a pledge with an anticipation of releasing it within 30 days or 45 days. But here in this market, we were the first ones to come with the 12-month scheme. And to speak about our schemes, we only start from 12 months. We go all the way to 18 months, 24 months and 36 months. That means 2 years and 3 years. What we tell our customers, incoming customers, is that whether you need it for 10 days, 15 days, 25 days, 30 days, take our 1-year scheme and close it whenever you want it and pay only the interest for the number of days you have utilized it. And there are no pre-closure charges or there are no other hidden charges onto it. By this product, what we focus and what we envisage is that we are giving a fallback for the customer. So in case he's not able to pay back the interest and principal on the shorter period schemes, which he might opt from our competitors, as our competitors are mainly infested with 3 months, 6 months and 9 months. So the tendency of the whole pledging community is to go for the 3-month scheme, since they have that 30 days or 40 days in their mindset. So he'll be forced to come up with the principal and interest payment towards the end of the 3rd month, and automatically his ornament moves for an auction. But here we give him a fallback mechanism by holding on to his gold and taking it up to the end of the tenure, maybe 12 months or 18 months, whatever scheme he has opted.
Usually people take loan for their short-term liquidity needs, or have you been observing that people do opt for long-term liquidity crunch also through gold loans?
So majority of the people actually come in for gold loans for their short-term liquidity needs. And there is a new class of people which have evolved, which is going for a longer tenure gold loan schemes, which is basically like the startup MSME groups. When I mean the startup MSMEs, it's like the engineering shop or the cycle shop or the corner shop anything like that, where it's their startup for them, and they opt into the gold loans for a longer tenure, is 2 years and 3 years, and by the maturity of that tenure, they graduate themselves into the banking sector. So that is another new class of people being formed. Otherwise, majority of them stick to the short-term requirements.
Okay. And what is the interest rate structure usually when it comes to, you talked about startup MSMEs? So interest rates there.
So
And when it comes to banks?
usually the interest rates prevailing in the market is somewhere between 9.5% up to 18% for the startup MSMEs.
Okay. And if people approach banks, then what is the interest rate structure?
What is happening these days for the startup MSMEs is that although there are a lot of schemes available as an initiative, but again, the framework and structure of the credit parameters are being structured in such a manner that it is not accessible to everybody. So those number of that group of people who has got less access, or rather has been denied an access due to the parameters, they resort to the long tenure gold loans, where they would mature themselves into a banking cycle and then upgrade their business into the banking sector at a later stage.
Okay. And if maybe talking about millennials, so people living in metro cities or even in tier 2 cities at best, if they are to apply for gold loan, then what is the process and what are some important things to keep in mind when they are doing it online? Because there are chances of landing on fraud websites also. So what to keep in mind when somebody wants loan against gold?
Opting for an online gold loan, it is always good to opt for with an organization who has got a network which is available and visible, specifically a brick and mortar setup, so that you shall be aware that where your gold vests, and in case you need to do an emergency release of your ornament, you can go to that particular location to get the release done. So it's always good to have your gold loan lodged, your own online gold loan lodged with a hybrid company which has got a brick and mortar setup along with its online platform.
And I believe the process is entirely digital, or maybe for valuing the gold, some physical setup is required, probably visiting nearby branch offices to get the gold
what
value.
happens is that the online gold loan, the branches virtually go to the doorsteps of the people. So the valuation of the gold loan actually takes place at your doorsteps, and the electronic onboarding of the customer also takes place at the doorstep. After all the process has been done, the confirmations are being taken through emails and OTP confirmations, and then post the transfer of the loan amount to the customer's account, the particular virtual branch people along with the gold leaves the customer's premises. This is how usually it's been structured.
Okay, so if you can explain the entire process step by step, as in the entire process and how much turnaround time it requires from beginning to end.
So first thing it happens is that there is the request comes from the customer. It can be an online request or it can be a request done through the call center, where the customer confirms or put forwards his request for a gold loan, and the call center interacts with the customer in understanding what is the value and what is the quantum required. And appointment is being fixed with the particular customer on his particular address. Usually it should be his residence address or his workplace, which is again his address, his workplace address. Then once the appointment is being fixed, he shall be given the details of the representatives coming from the company in terms of their ID card names, etc. from the call center. And then the representatives shall be visiting the particular premises. Then what happens is that then again they shall have an interaction with the customer and understand what is the ornament, and the ornament will be put for the appraisal in front of the customer itself. It shall be appraised by the expert who would be a part of the team, part of the 2-member or 3-member team who has gone to the doorstep of the customer, and the physical appraisal takes place then and there. Then on the basis of the weight been confirmed on the scheme being selected by the customer, and within the specified LTV percentage as prescribed by the RBI, the maximum loan amount value is being confirmed to the customer. Once the customer confirms that, then the digital onboarding takes place of the customer, where his KYC, everything is being loaded digitally onto a tab. And then the scheme is being selected onto the tab, and then an email and OTP confirmation comes to the customer in terms of the approval. Then on the basis of the email and OTP confirmation, the confirmation for the scheme as well as the KYC acceptance on the company. Once the customer gives that acceptance, it's digitally the documentation are being done. Then there is just a small printout slip coming in, and on the basis of the printout, the money gets RTGS done to their customer's particular bank account. And once that transaction is done, the gold is being packed, and the team leaves the premises of the particular customer. So this happens in a very discreet manner, and this actually takes care of the prevailing small percentage of taboo which is around.
Correct. Right.
Because the transaction is discreet, and the customer doesn't have to walk into a gold loan branch.
Okay, that is true, because that's a taboo that I was talking about, that we still have it even in metro cities. But it's great that they do it discreetly.
That is a very less percentage now, and see, the average ticket size for gold loan is ranging somewhere between 60,000 to 90,000. So for that class of common Indian population, the evolution of gold loan has taken place in such a manner that it has become as an option for fundraising and taking care of their fund requirement.
Right. And give us some sense of loan to value, how it is decided, and any paperwork is required, and the role of credit score and other parameters when it comes to interest rates.
Gold loan is a unique loan where actually the underwriting does not take place on the customer. So it's basically not on the basis of CIBIL scores or not on the basis of banking transactions.
CIBIL score is not taken into account.
No, especially with the NBFCs, it is not. Basically, the underwriting is being done on the asset. So that is one of the other reasons also why gold loan has come into the prominence, because of the credit parameters prevailing in the market. So basically, if a customer has got a default in an EMI, then his credit parameters would fall, and it would refrain him from taking any other loan. So it's like he has got no other second chance. So automatically, gold loan is the best option for him to neutralize the situation and to get back into square position,
Okay, since credit score is not being checked, so in case the person fails to pay back and fails to get their gold unpledged, then it won't affect their credit score in the sense.
So it would. No, once what happens is that once the maturity happens and then it goes for an auction, then it gets marked in its in their CIBIL parameters. So again, it might CIBIL is not a part of the underwriting, but in case of default, it gets marked in CIBIL.
Okay. Correct. Understood. And usually people take it against jewelry or maybe gold coins. What form of
as per the RBI norms, we are supposed to lend only against jewelry. We are not supposed to lend against pure raw bullion. So gold coins are not entertained, only jewelry is entertained. And as you asked your earlier question in terms of the LTV, RBI has got specifications that you should not be giving more than 75% of the LTV at the time of disbursement. And on the rates also, they have got a specific parameter which we have to follow. They have put forward their parameters that the gold loan companies and the bank should follow the Indian bullion jewelers last average 30 days rate.
And something that people should know about in terms of gold prices, and gold prices are dynamic. Does it have an impact on LTV later on, or something that customers, borrowers
So there are instances when gold prices go up, customers have always got a chance of taking a top up. And there is a reverse instance also when the gold prices go down, the companies start making margin calls And in case of failure from the customer to adhere to the margin call, automatically the particular ornament moves for an auction.
Correct. So if gold prices start falling and that LTV, RBI specified LTV is 75%, it has to be maintained all the time, or does
It's
it
at the time of lending.
Okay. So when people may have to come forward and return some amount to maintain LTV.
So usually the margin calls are being made at a point when the total outstanding of the loan reaches 90% of the current metal value. So when I mean total outstanding of the loan, it includes principal and interest together.
Okay. And gold loan is allowed against jewelries, as you mentioned. But what about gold mutual funds, gold ETFs, and sovereign gold bonds?
So it's also allowed as per the RBI against the sovereign bonds and ETFs.
That is allowed.
That is allowed.
And LTV there is also 75%?
Yes,
or it
75.
All right. And people should reach out to NBFCs maybe or banks. If you can give us some difference between when to reach out to a bank for gold loan and when to reach out to an NBFC.
See, one of the major difference between a bank and NBFC is number one is that for the banks, it is one among the bouquet of products what they have. For a gold loan NBFC, this is their specialization. So their turnaround and the care and with precision which the customer has been handled will be totally different. And in terms of most of the time, gold loans are like a last moment resort or comes. They need to have a monetization at a very grand speed. So NBFC is the financial organization which can give that grand speed, which can satisfy the requirement of the customer, because banks with the other bouquet of products actually consume a bit of time in terms of the operations and disbursements.
Correct.
In case of people have got ample time with them, I suggest they can go to the banks even. Again, the only con what I have felt with banks is that they do a CIBIL check on the customer, and they do ensure that they don't have any overdue with their own bank first.
Okay, so that relief on the CIBIL front can happen only in case of NBFCs and not in case of banks.
Yes, exactly. Relief on CIBIL, and the fastest turnaround time also happens only at the NBFCs.
Understood. And lastly, something else that people should know about when they are applying for gold loan? Any maybe something to keep in mind and some questions that they can ask upfront when they are dealing with it?
The first things what you need to ask the companies when you go for a gold loan is that number one, they give you a rate, and you should understand the slab jump mechanisms what they have, because some companies just speak about the onboarding rate, and when in terms of default payment or in terms of failure to payment on monthly interest, there is slab jump system. So this is something which people should ask the company in upfront, that they make you understand what are the interest slab jump rates, and the customers should ask in advance if there is any pre-closure charges, if there is any other hidden charges involved in the particular transaction. All these things should be taken care of. And one more thing, the customer has to be aware of that where his gold is vesting. Like what I always felt is that gold loan is like a unique business where you need to earn trust from both your lender as well as your borrower. Because at the end of the day, the borrower actually pledges his sentimental valued asset with the gold loan company and takes 75% of the value. So literally for the borrower, it is like he's leaving his cash with the company.
Right.
He should be aware of the fact that where his gold is vesting, and at which point of time he can take a release, or at any point of time is the release possible. Mostly I suggest, or I personally advise people to go to companies where at any point of time release is possible.
Okay. So anytime release may not be possible. So if somebody wants to foreclose the loan, then can they do it? Or as you mentioned that anytime release may
that's what I said. Certain companies, they have got a system of keeping the gold in a central vault. So maybe you might be pledging it at a branch X or a branch Y. They have a system of moving the gold to a central vault. And there are certain companies who have come into DA agreements with banks or agreements with repledge agreements with banks, where they shift the gold from their vault to the bank's vault.
Mhm.
So in this cases, what happens is that once the customer comes and
Mhm.
wants a release, that release will not be possible in immediate. And why I insist on this immediate release aspect to be looked into is that, as I said, the average ticket size is quite minuscule, which is between 60 to 90 or something. It's an average common Indian. So if you look at an average Indian family, there is a festival a year or there is a marriage a year where all the ornaments are displayed, and for the function it has been shown off. So in certain cases, what is happening is that maybe today morning they come with the cash, they release the gold and they use it for the function in the afternoon, and tomorrow morning they come back for a repledge. So this is how fast the cycle they would like to maintain. They do not have that 24-hour or 48-hour gestation period where they make the payment and they wait for the gold to be delivered and all these things. So it is actually, this advice is specifically for the common Indian people that they should ensure where their gold vests in.
Right, it's important to know. Correct. Well, thank you so much for sharing your views with us. This has been really informative podcast. Thank you for joining us.
Thank you very much, Aprajita.
I hope you liked the episode today. Feel free to ask your queries. I'm available on X, my X handle, _Sharma. You can also look me up on LinkedIn by my full name, Aprajita Sharma. For more such podcasts, keep visiting smartcast.com. Signing off now. Bye-bye.
To stay updated on this podcast, follow us at HT Smartcast on all the major social media platforms. To listen to more such podcasts, log on to www.htsmartcast.com.